Welcome to today's Explainer, where we're tackling a mechanism that fundamentally shifts supply chain liability, the reverse charge mechanism, or RCM, in UAE VAT. If you handle any cross-border procurement, understanding how this completely flips the standard tax script is absolutely critical for your compliance. Let's dive right in. Here's our roadmap for today. We're going to start with the forward charge baseline, then introduce the reverse charge itself. From there, we'll look at why the RCM actually exists, outline the specific supplies that trigger it, and finally, wrap up with your exact responsibilities as a buyer. Kicking things off with Section 1, the forward charge baseline, the standard process. Now, to truly get a grip on the reverse charge, we first need to establish exactly how that normally works under UAE law. That baseline is incredibly simple. We call it the forward charge mechanism. In this standard process, whenever a registered supplier makes a taxable supply, the burden of collecting and reading that tax falls 100% on them. They make the sale, they charge the VAT, collect the cash, and then they're the ones who pay it directly to the government. You, as the buyer, you just pay the total invoice and walk away. Let's look at a concrete example to really cement this. Imagine a local company, ABC Television Ltd., sells an LED television worth 10,000 AED to Ahmad Associates Limited. Under normal forward charge rules, ABC Television collects the VAT. At a 15% rate, that is 1,500 AED. Once they have that 1,500 AED, ABC hands it straight to the government. See, the supplier does all the heavy lifting here, fully bearing the administrative burden. Moving right along to Section 2. Introducing the reverse charge, flipping the script. So what actually happens when we completely reverse who holds that tax responsibility? Well, as we just saw, normally the supplier pays the collected tax to the government, but under the reverse charge, it's the buyer or recipient who pays the tax directly to the authorities. The responsibility leaps entirely from the supplier making the sale straight over to you, the buyer receiving those goods or services. It is a total reversal of the standard flow, and it fundamentally alters your compliance obligations and supply chain dynamics. Which brings us to Section 3. Why does RCM exist? Logistical solutions. With such a massive shift in responsibility, we really have to explore why the UAE government created this alternate system in the first place. Why shift the tax burden to the buyer at all? It's a great question, right? Usually governments want the person making the money, the supplier, to handle the tax. So why complicate the buyer's life? Well, tax authorities rarely let revenue slip away, and honestly, this mechanism solves a massive logistical headache for them. See, the government introduced this to ensure VAT is always collected when a local supply is made by a non-resident supplier. Think about it. Auditing a foreign entity operating way outside the UAE is practically impossible. So to protect their tax revenue, they treat the local recipient, the UAE buyer, as the person making the taxable supply. By doing this, they keep the tax liability firmly within their own jurisdiction. Smart, right? Let's jump into Section 4, supplies triggering the RCM, when RCM applies. Now we'll dive into exactly when this mechanism kicks in for your business transactions. According to UAE VAT law, not everything falls under the reverse charge. It's reserved for a few very specific notified supplies. First, if you're importing specific goods or services for your business, you need to be on high alert. Second, dealing in the taxable supply of unprocessed or processed natural gas, crude or refined oil, or any hydrocarbons for resale triggers this. This also includes using these materials for the production and distribution of energy between a registered supplier and buyer within the UAE. And third, this is the broadest category, the supply of goods or services by a person who doesn't have a place of residence to a taxable person who does have a place of residence in the UAE. Just keep in mind, each of these scenarios comes with strict conditions under UAE VAT executive regulations to actually trigger that liability. And if your transaction does meet those conditions, the supplier steps away. That brings us to our final part, Section 5, your responsibilities as buyer, managing compliance. As the buyer in an RCM scenario, you instantly take on 5 major responsibilities. Number 1, you've got to determine the actual value of the supply that VAT needs to be levied on. Number 2, you must account for the VAT due on these reverse charge supplies in your own records. Number 3, and this is the big one, you have to actually pay that VAT directly to the government. Number 4, depending on your eligibility, you can claim input tax. And finally, number 5, you must maintain meticulous records. Seriously, these records are your ultimate proof of tax payment, and they are absolutely crucial for audit defense and for securing that input tax claim. Let's bring this all together with a quick real-world scenario. Say ABC Limited is a registered television dealer in Dubai. They import TV parts worth 1,000 AED from XYZ Components Limited, who are based all the way over in India. Because XYZ Components is a non-resident, boom, the reverse charge mechanism kicks in. Here, ABC Limited, as the registered importer in Dubai, is required to pay the VAT directly. Based on the 15% rate, ABC Limited calculates 15% of that 1,000 AED value, which is 150 AED, and they pay it straight to the UAE government. The Indian supplier literally never even touches the tax money. All of this really leads us to one final critical question. Are your international vendor payments accidentally making you liable for unpaid VAT? Because if you're just assuming your foreign suppliers are handling the tax, you might be sitting on a huge compliance risk. I highly recommend taking a close look at your supply chain today to make sure you aren't harboring any hidden liabilities. Thanks for joining me on this explainer, and stay compliant out there.